Nobody creates wealth alone. The person who believes they did is simply not seeing far enough back. That sentence will produce resistance in some people immediately. Good. The resistance is worth examining, because underneath most of the anger, the political fury, the ideological war that surrounds the word tax, there is a question that almost never gets asked directly. Not whether taxes should be higher or lower. Not which party has the better policy. The prior question. The one that, if answered honestly, changes the entire shape of the argument. What is tax, actually? Where did it come from? What is it for? And why does the thing that funds the roads you drive on, the courts that enforce your contracts, the schools that educated the workers your business employs, the military that protects the territory in which your property has value, why does that thing produce more sustained fury than almost any other feature of collective life? Start here, before the politics, before the ideology, at the simple fact. You did not build the road that connects your business to its customers. You did not build the legal system that makes your contracts enforceable and your property protected. You did not build the school system that produced the educated population from which you hire. You did not build the public health infrastructure that means your workforce is not decimated by preventable disease. You did not build the financial regulatory system that means the money you are paid in is worth something tomorrow. You did not build the police and court system that means someone cannot simply take what you own. All of this existed before you arrived. All of it was built and maintained by collective contribution. All of it is the condition of possibility for any wealth you have created. The person who earns $1 million in a functioning society and the person who would earn the same $1 million in a failed state with no infrastructure, no rule of law, no educated population, no stable currency, these are not the same person having the same experience. The society is doing enormous work that is invisible precisely because it works. Tax is the price of that infrastructure. Not metaphorically, literally. It is the contribution to the collective systems that made individual accumulation possible. The person who resists taxation most fiercely is typically the person who has benefited most from the collective system's taxation funds, and who has the most resources to deploy in the political project of being relieved of contributing to them. This is not a moral judgment. It is a structural observation. Watch what it produces. Now look at where tax actually came from. Because it did not originate as a social contract between citizens pooling resources for mutual benefit. That is the legitimating story told afterward. The origin is more direct. Tax began as tribute, as the systematic extraction of resources by those with power from those without it. The ancient king did not ask his subjects to contribute to shared infrastructure. He took grain, labor, and treasure because he had the army, and they did not. The surplus of agricultural civilization, the excess production beyond subsistence that the shift to farming made possible, was extracted upward by force. Tax was conquest made permanent, domination made routine. This history matters because it means tax has always carried two faces simultaneously. The face of extraction, power taking from those below it, and the face of collective provision, the pooling of resources to fund what individuals alone cannot build. Both faces are real. Neither cancels the other. And the struggle over taxation throughout human history is largely the struggle over which face is dominant. Over who pays, how much for what, decided by whom, with what accountability. In a democracy, the legitimating theory is that citizens collectively decide the level and purpose of taxation through their representatives. The reality, as we saw when we looked at inequality in corporations, is more complicated. Those with resources shape the political system that sets tax policy. Those with the most to contribute have the most incentive and the most capacity to influence the rules of contribution. The result, consistently across wealthy nations over the last half-century, has been a shift in the tax burden away from capital and toward labor, away from wealth and toward income, away from those who have accumulated and toward those who are earning. The top marginal income tax rate in the United States in 1960 was 91%. Today it is 37%. The capital gains tax rate, the rate at which returns on investment are taxed, is lower than the income tax rate paid by many wage earners. The person who earns their living by working pays a higher rate than the person who earns their living by owning. This is not an accident of oversight. It is the outcome of sustained political effort by those for whom it matters most, applied over decades to the rules that determine who contributes what. The economist Emmanuel Saez and his colleagues have calculated the effective tax rates paid across the income distribution in the United States. What they found should stop you. When you include all taxes, federal, state, local, sales tax, payroll tax, property tax, the total effective tax rate paid by the very wealthiest Americans is roughly equal to, or in some analyses lower than the effective rate paid by middle-income Americans. The system that presents itself as progressive, taking proportionally more from those who have more, is in its actual operation closer to flat and at the very top, regressive. This happens through mechanisms that are legal, sophisticated, and almost entirely invisible to those who do not employ accountants and lawyers specifically to navigate them. Wealth held as unrealized capital gains is not taxed until it is sold. Borrowed against that wealth produces cash that is also not taxed. The loan is repaid when assets are sold, sometimes by heirs who inherit at a stepped-up basis that eliminates the capital gains that accumulated over a lifetime. The combination of these mechanisms means that extraordinary accumulations of wealth can be maintained and passed across generations, while generating minimal taxable income at any point. The wealthy do not evade taxes. They arrange their affairs entirely legally so that the tax as written does not apply to their actual income. The small business owner paying 30% on income they drew from their company, and the billionaire paying an effective rate of 8% on the wealth they accumulated that year, are both operating within the law. The law was written by a political process they did not participate in equally. Now go to the global level. Because tax does not only happen within countries, it happens between them. Or rather, it fails to happen between them in ways that extract enormous resources from the places that can least afford to lose them. The multinational corporation operates across dozens of jurisdictions. It earns revenue in one country, books profits in another, where rates are low, holds intellectual property in a third where it pays almost nothing, and finances operations through loans from subsidiaries in a fourth that produce interest payments, which are deducted as expenses before tax is calculated. By the time the accountants have finished, the profit that appears in the low-tax jurisdiction bears no relationship to where the actual economic activity occurred or where the actual value was created. Tax havens are not anomalies. They are the architecture. The Global Financial Integrity Organization estimates that developing countries lose more in illicit financial flows, much of it through corporate tax avoidance, than they receive in foreign aid. The money flows in one direction. The aid flows in the other. The net movement impoverishes the countries that could most use the revenue and enriches the financial centers and corporate structures that manage the flows. The system was not designed to be fair across borders. It was designed by wealthy countries to serve the interests of wealthy countries and the corporations that operate from them. The developing world participates in an international tax architecture it had almost no role in constructing, and that consistently extracts from it at scale. Now bring this into the texture of your own life. Because tax is not abstract. It is the road you drove to work this morning. It is the hospital that treated you or someone you love. It is the school where children in your community learn to read. It is the fire service that would respond if your house burned. It is the legal system that would enforce any contract you sign. It is the currency stability that means the money you saved last year still has value this year. Most people experience tax primarily as subtraction, the number that was on your payslip before the government took its portion. The gap between what you earned and what arrived. And that experience of subtraction is real. The money was yours and now it is not. But the money was also made possible by systems you did not build and do not maintain alone. The question of how much you owe to those systems and how that contribution should be distributed across people who have benefited from them in vastly different proportions is not a question with a simple answer. It is a genuine moral and political question that every society has to work out in its specific conditions, with its specific history, with its specific distribution of power among those doing the working out. What is not genuine is the claim that taxation is simply theft. That framing eliminates the collective infrastructure that makes private wealth possible and treats the individual as though they created their position in isolation. No one did. The myth of pure self-creation is the founding story of the political movement most committed to minimizing taxation. It is a story that requires you to not look at the road, the court, the school, the stable currency, the enforced contract, the inherited legal framework, all of it already there, already funded, already working on the day you started. And what is also not genuine is the claim that taxation is inherently virtuous, that more is always better, that collective provision is always more effective than alternative arrangements. Governments have used tax revenue to fund wars, to enforce oppression, to build bureaucracies that serve themselves more than the populations they claim to serve. The accountability of public spending is a real problem. The efficiency of public provision is a real question. The appropriate level and structure of taxation in any given society is genuinely contestable. The honest position holds all of this simultaneously. Tax is the price of civilization and the tool of power. It is the mechanism of collective provision and the instrument of extraction. It is necessary and it is contested, and it will always be contested, because it sits at the precise intersection of the most fundamental questions any society faces. Who owes what to whom? What is individual and what is collective? How much of what you have did you make, and how much was made for you? The question that stays open is the one you will carry every time you see your payslip, every time you drive on a public road, every time you use a system that was there before you arrived. What do you actually owe to the world that made you possible? And who gets to decide?